Hold on to your hats, folks, because the stock market just got a whole lot bumpier. Former President Trump is at it again, slapping new tariffs on our biggest trading partners. This unexpected move has sent shockwaves through Wall Street, leaving investors scrambling for cover. Remember the trade wars of the past? Well, they're back, and this time, the stakes are even higher. The Dow Jones took a nosedive, plunging nearly 450 points on the news. It's clear that investors are worried, and for good reason. These tariffs have the potential to disrupt global trade, stifle economic growth, and fuel inflation. We're already seeing the early signs of panic in the market, with volatility spiking and investors dumping risky assets. This isn't just some abstract economic theory, people. This is real money, your money, being impacted by these reckless policies. Whether you're saving for retirement, a down payment on a house, or your kid's college fund, these tariffs are going to hit you where it hurts. We're in uncharted waters here, and it's more important than ever to stay informed and protect your investments. So, who's in the crosshairs of Trump's latest trade war? Our neighbors to the north and south, Canada and Mexico, are bearing the brunt of it. Trump has slapped a hefty 25% tariff on most goods coming from these countries. He's also targeting Canadian energy products with a 10% tariff, a move that could send energy prices soaring. And let's not forget about China, the usual suspect in Trump's trade wars. He's piled on an additional 10% tariff on all Chinese goods, escalating tensions even further. Trump claims these tariffs are necessary to address immigration and drug trafficking, but many experts see them as a misguided attempt to renegotiate trade deals. The problem is, these tariffs are like a boomerang. They might seem like a good idea at first, but they'll ultimately come back to haunt us. When we impose tariffs on goods from other countries, they retaliate with tariffs of their own. This tit-for-tat escalation only hurts businesses and consumers on both sides of the border. Even the mighty, magnificent Seven Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta, and Tesla aren't immune to the fallout from Trump's trade war. These tech giants, which have enjoyed a remarkable run in recent years, are now facing the music as investors flee to safer havens. Nvidia and Tesla, in particular, have taken a hit due to their reliance on global supply chains and exposure to Chinese markets. The tariffs couldn't have come at a worse time for the tech sector. Amazon, for example, just announced a massive $100 billion investment in AI, but warned of slowing cloud growth. With the added uncertainty of a trade war, investors are questioning whether these tech titans can maintain their dominance. The performance of these tech giants is a bellwether for the broader market. When they stumble, the whole market feels the tremors, and right now the tremors are being felt far and wide. So, what's an investor to do in these turbulent times? Panic selling is never the answer. Instead, take a deep breath and listen to the experts. J.P. Morgan, one of the most respected voices on Wall Street, advises investors to stay the course and maintain a diversified portfolio. Now is the time to focus on quality companies with strong fundamentals and a proven track record of weathering economic storms. Look for businesses with a domestic focus, as they'll be less impacted by global trade tensions. And don't be afraid to seek professional financial advice to navigate these treacherous waters. Remember, this too shall pass. The market has a long history of overcoming challenges, and this trade war will eventually end. By staying disciplined and focused on the long term, you can protect your investments and come out stronger on the other side.